Welcome everyone to this annual special event that we have. I'd like to thank you all for organizing yourselves to be here tonight. I know that besides Gulf food, many of you have had to jump through hoops to be with us. We appreciate it and we cherish the association with each and every one of you. I'd like to say a special thank you to our organizing committee for this event. Mariam, Raquel, Ali, thank you so much for doing this all. "2017 was a wonderful year for the Switz Group, where revenues grew by some 11%, but more importantly, we grew in our capabilities. Group revenues now are 285 million. Majority of this additional 27 million has come from the inclusion of the European businesses that we're now starting to consolidate. I'd like to give a special round of applause to Elias Davos for the wonderful work that he has done for the group. His work has added 20 million to the group revenue in this year. A special thanks to him. Our bottom line has remained flat as we have lost profitability in our Middle Eastern businesses. This has, however, been offset by the increased profits coming from India and the inclusion of our European companies. Our balance sheet remains deleveraged, a signature of the Switz Group. 2017 also marks the year that our equity crossed 100 million US. We do now have some debt, not much, but some. We've taken this on mostly to finance the two Master Baker projects, Technopark as well as Al-Kharj. We've taken on some debt also in Europe for acquisitions that we're planning on this year. Our capital ratios continue to decline as we find it difficult to retain profits in the Middle East. As the group expands, so it does in complexity. And every year I try and present the financials in a simpler way so that it is easy to understand. The Switz Group employs two strategies to grow and protect itself: value chain and geography. This year I felt it more important to highlight our geographical diversification, especially since it has worked. This is the progress since 2010, when only 16% of the revenues came from outside of the GCC. And in 2013, it grew to 20%. Last year, with the slowdown that our Middle Eastern businesses faced and the rapid organic growth that we saw in India, Asia now accounts for some 27%. They added $10 million in India last year. In addition to this, our European acquisitions have added a further 7%, bringing the total to 34%. We now operate in 9 beautiful countries of the world. We learn immensely from their local bakery and patisserie cultures, their competitive landscapes, and their business models. As my father mentioned, we expect more and more of our revenues to come outside of the GCC, except I think the Middle East will start growing again. Now, coming to our value chain diversification results. As you can see, our ingredients value chain has been given a big boost, while industrial and retail is flat. Almost all the ingredients growth is as a result of the addition of the European businesses. MML's non-bakery growth has been quite spectacular. 4 million addition again for another year. They did 4 million between 15 and 16 as well. This was achieved by aggressive pricing and grabbing of market share. It's been a horrible year for our egg station business as the Qatar blockade cut off our supplies, and we lost 50% of our Emirates Airlines business. Besides the growth in numbers, the more exciting part of our ingredients vertical is its future capabilities. MML has a bright future ahead as Sagar and his team venture into Saudi Arabia to sell eggs and more. Olympic is gearing up to acquire one of its competitors to expand in its chocolate manufacturing capacity and hopefully add pasteurized egg also to its portfolio. Orba is at the center of future recipe development with its enzyme technology and know-how. In the Philippines, we're acquiring new egg customers with the upgraded plant that we've commissioned. And even in Sri Lanka, we are now selling bakery ingredients to the vibrant bakery market. This is not to forget our investment in Richemont and our giving back to the education of our industry. I've consolidated all of these 5 businesses just for 2017, as previous years' comparisons are meaningless. But as you can see, all the margins are healthy. We have bet big on eggs in Saudi, and we hope to see traction this year. Moving to our largest and our oldest ingredients vertical, industrial bakeries. This year, I thought it wise to consolidate our $4 million thin dough business in India with our iBake business in the Middle East. The two companies are customers of each other, and they increasingly coordinate strategies together. iBake, our crown jewel, has shown progress in its adopted strategy to focus on higher margin products, namely thin dough and rusk. Jointly, they now made about a third of overall group revenues and have grown 18% over the last 2 years. Our cake business unfortunately continues to decline as the team struggles to launch new products that are more relevant. Tariq and his team have done a wonderful job of maintaining its gross margins. They continue to invest heavily in brand building activities that are evident in the drop in the EBITDAs and the net profit. As major evolution is underway in Saudi Arabia, so is there in iBake. We expect the team to come out of this downward trajectory a stronger, more well-defined company. I move now to the star performer for a second year in a row, Dream Bake, our industrial bakery business based in Calcutta. In 2016, they added a $9 million addition to their top line, and last year they added another 8. I'd like to mention that this does not include our contract manufacturing business with Britannia or ITC or Bauli. We accepted our second cake line in the second quarter of 2017, and we placed the order for the third in the fourth quarter. That was a record even for the manufacturer. We have faced cost pressures in raw materials as we have adopted a strategy to make higher quality products using higher quality ingredients. Labor costs across India are rising fast, and we would like to be in a position to always be ahead of that curve. Our continued investment in fully automated cake lines will assist in our ability to fulfill this promise. The balance sheet is accumulating cash. This is to deploy in the south part of India, and we hope to see a new facility come up by 2020. Finally, our last value chain for the evening, our retail bakery vertical. The vast majority of our 42 million comes from one company, again in Calcutta, Mio More. Anirban now assumes leadership of both Calcutta businesses and is building a team to ensure that products and consumer experiences are rejuvenated and excite and delight. It's also good that we have cash accumulating on the balance sheet, as investments are going to be required in upgrading existing facilities and building new frozen patisserie capabilities. Our second largest retail business, even though declining, is Modern Oman Bakery. Altamash has been throwing everything he has to try and arrest the decline. Sadly, we lost some $2 million last year. We remain to be one of the largest celebration cake retailers in the country and hope that we can become profitable by the end of the year. Last but not least, our Sri Lankan business has had a good year, posting an 11% growth in its retail operations. Muhammad's greatest challenge continues to be high staff turnover, as skilled Sri Lankan bakery staff are a widely sought after commodity across the world. Ladies and gentlemen, this brings me to the end of the stakeholders' financial presentation. I hope that you've had a chance to absorb all that we do. 2017 was a year while the world was trying to figure out where it wanted to go. The Switz Group quietly and carefully continued on its own little path, adding bakery knowledge to our little basket. We remain focused on our industry and dedicated to our business and our people. I would like to take a moment to thank all of our team members' families that support them as the challenges of the business take away precious time away from you. We really appreciate all that you do. I'd like to thank all the teams of the Switz Group that are here today and that are not. Enjoy this night. It's the one moment that we get to breathe it all in. It's been a wonderful year. Tomorrow Gulf Food will start and the chase will start all over again. Please enjoy your evening. Thank you so much for being here with us on our special evening.